Old Mutual has reported a 29% rise in adjusted headline earnings at the halfway stage of its financial year. The increase was driven by a strong underwriting performance in Old Mutual Insure and strong equity market performance, particularly in South Africa and Malawi. An interim dividend of 37 cents per share has been declared. That's up 9% on the previous period's payout. Looking ahead, Old Mutual says the combination of geopolitical headwinds and resilient market sentiment underpins a cautious but constructive outlook for the remainder of 2025. Alongside the group's results, the financial services provider also announced that Roger Jardine and Jan Hendrik Rasmus will join the board of Old Mutual. The firm's chair, Trevor Manuel, says that both bring exceptional leadership and governance experience that will further strengthen and support the company's strategic ambitions. Jardine's last high-profile private sector role was that of chair of First Rand. He left that position at the end of 2023 in a surprise move to launch a political party known as Change Starts Now. Growthpoint has given shareholders a reason to smile. The property firm has upped its final dividend by 8.6% to 63 cents per share. This takes the total payout to R1.24 for the year, which is an increase of just over 6%. The group says this was driven in part by an improved performance in South Africa during the period. Growthpoint says the property cycle has entered a growth phase, and so it expects distributable income per share for 2026 to grow between 3 and 5%. Pan-African Resources has produced glittering results. The miner has posted a near 47% jump in full-year headline earnings per share. That's thanks to higher output and a rally in the gold price. A final dividend of 37 cents per share has been declared. This is a record payout for the group and reflects an increase of 68%.
So ultimately, it was a great year for Pan-African, obviously on the back of the best gold price in history. But then also we managed to increase production, and we managed to bring 2 new transformational projects into production, which was fantastic. So it was a year of records for Pan-African. It was record production in the second half. It was record earnings and profits, and we're proposing a record dividend for approval at the upcoming AGM.
Looking ahead, Pan-African Resources plans to move its shares to the London Stock Exchange's main market. That's after having its stock listed on the AIM since 2007.
So it's a logical progression for Pan-African. We were the largest miner or gold miner on the AIM market by some yards, and we have a loyal and supportive shareholder base in London. Moving up to the main market is the logical next step. It means that in all likelihood we'll be included in indices, and we'll have exposure to a much bigger investor base. So that's quite exciting. But we continue to be committed to the JSE. Most of our shareholders are South African. They've done well, and definitely the JSE will continue to be the primary market alongside London.
In the meantime, Mete has reported a 53% jump in interim revenue. That's thanks to an improved performance at its vehicle components business and the addition of acquisitions. Headline earnings per share have come in at 65 cents. That's from a loss of 3 cents previously. But on a continuing operations basis, HEPS fell 8% to 71 cents. No dividend has been declared. Remgro is expecting a profit bump. The investment holding company has forecast a rise in annual headline earnings per share of as much as 43%. And that's thanks to an improvement in the majority of the firm's investee companies. The group also noted lower finance costs as well as the negative impact of significant corporate actions in the comparative period. More detail will be made available when Remgro opens its books on the 23rd of September. South Africa's construction sector remains stuck in a low confidence rut. That's as only pockets of optimism emerged in the latest FNB BER Building Confidence Index. The morale indicator shed 1 point in the third quarter to register a level of 35. This marks the third consecutive decline in building sentiment, as 65% of industry participants remain dissatisfied with prevailing business conditions. FNB senior economist Siphamandla Mkhwanazi says the index has been moving within a narrow, albeit low band since the middle of last year. And this means that while sentiment in the industry isn't tanking, there is little lifting the business mood across the building value chain.